Welcome to the FXStreet.com 2010 Traders Conference in Barcelona. Today we're interviewing Triffany Hammond of TriffFX. On behalf of e-Forex magazine, TraderSpeak and FXStreet.com, I'd like to welcome you, Triffany.
Thank you so much, Larry.
Triffany, give us some background of how you got into the trading game, what you trade.
Well, it was initially designed to be a way for me to fund some entertainment opportunities. I'm also an actress and had a production company of my own that I wanted to find a way to be able to be at home with the kids and also fund my production company and still be able to make some money. So I started in stocks and equity, the equity market using stocks and options.
What year was that?
2002. So it's been a while since then. And when Forex became available to the retail trader, I fell in love with it. The volume and the volatility really suited my trading style, and I've been a fan ever since.
So how long have you been in the Forex market?
6 of the last 8 years. Yeah.
Okay, and how's the market changed in that time?
We see a lot more volatility in current conditions. The political, economic structure of the world market has changed to create completely different conditions for the push and pull between the pairs that we see and the way that they're traded in terms of large money being exchanged from hand to hand. So,
okay.
Yeah.
And tell us a little bit about your fundamental trading approach. How do you look at the market? What are the main differences between, say, you and an average trader? How do you distinguish yourself? And a little bit about what you teach.
Yeah. In terms of the fundamental approach, I very quickly came to the conclusion that you can't avoid the news. It would be really nice if we could say, don't trade around the news because the news is going to create difficult trading conditions. However, news is happening constantly. We have overlapping sessions. We have trading going across the globe 24 hours a day. So once I realized that, I began to look at particular news announcements to see the effect that they had on the pairs. How early does the market start to price in its predictions? How long does that pricing in happen until the actual announcement comes out? So I started keeping a spreadsheet that kind of tracked that sort of behavior on major announcements, not the really big ones. Non-farm payroll, I don't trade. Rate announcements, I don't trade. However, the smaller announcements, I found that oftentimes, based on a technical basis for the breakout trading that I like to do, if I could cohesively stick that to a fundamental announcement that was coming out, it boosted my trading. So I keep a pretty detailed spreadsheet of those kinds of announcements and related announcements into the announcements that the market's watching. So it helps me make predictions too. But what I do in terms of my training, I don't necessarily strictly teach technical or strictly teach fundamental. I help traders become well-rounded in their experience by teaching them both. And really my focus is not even necessarily simply on the system. I actually want to start with who a person is first and then help them develop a system second, so that what they're developing in terms of a trading system really is specific to the hurdles that they face in their personal development as well. And that's what I focus on in my training.
Tell us a little bit about your technical approach. I've seen you use candlesticks and so forth. You use ranges. Can you give us a little bit of a summary of all that?
Yeah, it's simple. I wait for pauses in the market. I wait for the market to show indecision.
Congestion?
Yes, congestion, exactly. Consolidation ranges, the tightening up that will happen, the triangulation, and I wait for those levels to be really nicely defined, and then I wait for a breakout. And my reasoning behind that is, first of all, it keeps my chart really simple. It keeps my trading decisions super simple because I'm merely waiting for the market to make up its mind. I'm not trying to predict anything because I think we get really tied up in Mike Baghdadi actually says this, you want to be right, and you get tied up in your ego when you start trying to predict things. So I actually like to wait for that consolidation to break out, and then I jump on board with the directional breakout. So that's the kind of trading I like to do. Very, very simple. It requires no indicators, nothing complicated on the charts that you have to understand. You're just waiting for momentum to pick up from the market and climb on board.
Okay, and what would be your advice to the new trader?
My advice to the new trader would be to be please be willing to be patient in your process. Understand that this is not a get-rich-quick scheme. This is something that takes years and years of practice, years and years of discipline. And also have a good willingness to forgive yourself your mistakes. Be willing to make mistakes. Don't beat yourself up when you make them, but be willing to learn from them and grow and move on with confidence so that your next experience can be a positive one.
And what are the main candlestick patterns that you use, if any?
Well, some of my favorite trades are still the great big daily channels or daily chart trades. Double tops, double bottoms, heads and shoulders. Those are some of my very favorite trades to take, and they're all of that volatility is absorbed in a daily candle. The signal is extremely clear. Those are kind of my very favorite patterns. However, when I'm talking about consolidation breakouts and starting to look at what it means when those support and resistance levels get left after a time of consolidation or indecision, the candlestick patterns on a shorter term time frame become 1 and 2 candlestick patterns. So engulfing and haramis and hammers with a confirmation candle, that kind of thing becomes really important on the shorter term charts where that volatility isn't being absorbed, it's being reacted on.
Okay, thank you very, very much.
Thank you so much.